All right, so welcome you all to today's episode. As you all know, every week the market offers opportunities, right? But only if you have a plan, right? Definitely you need to have a plan. If you don't have a plan, then then the market will plan you. Do you understand? It's a bitter truth actually. All right. So this week I'll be walking you through my exact trading plan, the pairs I'm watching, my risk management approach, and the setups, right? And also the key areas that I believe could be the most profitable move of the week. All right. So I urge you all and I urge you all to stick, to the end of this video because the last setup might surprise you if you trade gold and BTC. Because remember from our previous video, I made mention of me saying I trade only gold and BTC, right? So that is my major, focus pairs that I trade, right? So you will definitely want to hear this to be honest, because trust me, it's really going to help you. Either you are a beginner or a professional trader, you need to like stick to this video to the end. All right, it will help you just like I promised. All right, so my name is Matthew. I'm the CEO of my Choosing FS Academy, and on this channel, I share my trading journey and strategy to help you approach the market with confidence. All right, so I don't trade on luck, never. I don't trade on luck. I'm not a gambler, all right? I trade with rules, I trade with plans, right? I trade with structure, and I want to show you how I build my plan step by step. All right, so without wasting most of our time, let's dive into the chart to see what we have for today. All right, so like I said, my major focus is my pairs that I focus on is Bitcoin and gold. So let's start with gold or Bitcoin, whichever. Let's dive into BTC. All right, I think okay, this was my last week analysis and it's playing out well. Though I entered based on lower time frame confirmation, which actually, took me out before before going in my direction, which is this here, right? This was I think it was on 1 hour time frame. Yeah. So the 1 hour time frame. So the trade was a break-even trade, right? Whereby price took out the liquidity above here, break structure to the downside, and then reverse, to 61.8 level, and then I entered from here and printed one ratio, one plus, one R plus, and then I move my stop loss to break even, and then boom, he reversed to hit my stop loss. All right. What I actually don't want to see first is market breaking this high. Remember, we have to always set stop loss at the zone whereby if the market should invalidate it or hit the stop loss, that shows that the trend has changed from my own perspective. All right. So at this point, price reverse, hit the stop loss, break above that zone there. Then I discovered that, right? Based on my data, I'm to start looking for buyers opportunity because it's obvious to me that buyers are more in the market. All right, so that was the reason why I started, looking for buy opportunity, and then the market was around this zone, right? When I came to the chart, I think it was last week during Wednesday stroke Tuesday, something like that. Yeah, so I saw the setup and then it was a good, you know, um, analysis for me. My plan, everything was, accurate. So I executed at this zone here. I just set a limit order and then boom, straight to take profit. But to be honest, I didn't take profit when the market I didn't take profit at where my take profit was set initially, right? I actually closed out of the trade because of my rules, right? Never to hold the trade. Once the New York session is closed, I'm supposed to go out of every trade I opened, right, for that day, either in a profit or in a loss, right? I don't hold the trade till overnight, except maybe, you know, uh based on the conditions actually. All right, so I close with profit but not with full take profit. All right, so I was looking forward to look for another buy opportunity, right? I was looking forward to look for another buy opportunity right there. And then what I wanted to see is price taking out this liquidity, which it did. So the confirmation I need was price, to start breaking structures to the upside, something like this. Then before I start looking for buys here at the 61.8 retracement. Why? Because liquidity was taken here, breakup structure happened here, and then I'll look for buy to the upside, right? But unfortunately, the market didn't give me what I want to see. So I left it to do what it wants to do. And then when I confirm price breaking this structure here, that shows that the downtrend, right, is likely to continue. Now the market has resumed its downtrend again. So now we are to start looking for sales opportunity, right? This is BTC USDT, all right? So we are to start looking for sales opportunity. All right, so I have to delete all these tools here so we can start a fresh signal, right? This POI zone I marked here was actually on 4-hour time frame. If I'm to enter on 4-hour time frame without lower time frame confirmation, definitely the trade might still be playing out by now, right? I might still be in profit by now, probably 1:2 plus, right? Because I used lower time frame confirmations. That was why I was stopped out as stop loss before price started going in my direction. But nevertheless, the plan you have to always follow the plan, right? Do not change plans um because of a single trade, right? So for price to break above this place, trust me, for me, it's like a change of character for me. All right, it's like a trend change because I don't want to see price breaking above this level, and price has already did with a candle close. If I zoom out, you will see it clearly. That actually broke it with a candle close. This was the break. Yeah, so I believe this is a reversal, and for me, I'll start looking for long opportunities. But remember, we have to start our analysis from the daily time frame because we trade based on structure, liquidity, and then entry. So let me remove all of these tools so we can start a fresh analysis to see what we need for the week. All right, so okay. Now let's go on the daily time frame. Now let me give you guys a quick plan of how I'm going to be trading this week. Is based on order flow. So if you trade on order flow, I will advise you to please pay close attention to what I'm about to share here. It's going to help you a lot because if you're an SMC trader, ICT trader, and trade based on order flow, right? Trust me, this information I'm about to share will really help you. And please pay close attention, just like I said. All right, so now first, you need to start from the daily time frame, which I'm still going to explain, but let me use diagrams, these tools here to explain something to you, to right draw out the skeleton of what we are about to, trade now. So we need to start from the daily time frame to know the market direction, the market structure, like where the big, the big moves are, right? Who is actually dominating the market? We only know that from the daily time frame. So what I want to say on the daily time frame is market, breaking structure to the upside. That is, if I'm looking for buys, I want to see market clearly in an uptrend. Why, if I'm looking for sales, the same way, I want to see price, breaking structures to the downside. All right. It's as simple as that. We are not actually analyzing on the daily time frame. What we just want to see is who is dominating the market. Is it buyers or sellers, or is it consolidating? All right. So that is just what we want to see on the daily time frame. All right. So after confirming this on the daily time frame, if you are bullish or bearish, then what we want to see next is switching down to the 4-hour time frame, right? Or I basically, based on I'm a day trader, so I basically use the 1 hour and the 15 minutes to look for, confirmations, for entry confirmations. All right, so what I do on the 1 hour and 15-minute time frame are this. Now, if I confirm on daily time frame who is dominating the market, then I can switch to the 1 hour time frame, right, to start looking for, you know, let's use the case of uptrend scenario to explain what I will want to see on the 1 hour time frame before I will look for entries. So let's say this is on daily time frame we are bullish, and on 1 hour we come, and then what I want to see is something like this, price breaking structure to the upside as well. All right, now this is a break right here. This is a break, right? This is another break, right? But I'm not considering all of this, right? This is my real break of structure right here. I will see this as my break of structure, and this is the area where I'll want to look for entry confirmation, either based on order flow or based on order blocks. Why? Because price was able to take out this liquidity here. So for price to take out the liquidity here, it has made this whole area now to become a POI zone, right? It has made this whole area to become a POI zone. So I'll start looking for entries, when price retrace. I can plot my Fibonacci, for example, from here to where the breakup structure happened, to the exact place where the breakup structure happened, not where the market currently is, right? Like I do on my by my own self, like based on data, based on backtesting, I use this particular concept. So I draw my Fibonacci from the low to the break of structure, then my entry will be around 61.8. But if I see that my stop loss will be too tight, right, I can then use maybe 50% retracement level. Because now, let me delete this to here. Because if I'm to enter or set a limit order, definitely this will be my entry right here. I will enter from here. Then my stop loss will be set below this low here. I can just bring it down a bit, all right? Right? What I don't want the market to do is for it to break this low. If you break this low, for me, it's a trend change. So always set a stop loss at the area whereby if the market should hit it, or if trade should hit your stop loss, that shows that the trend has been invalidated. So I will want to, enter from here at the 61.8, right? And then set my take profit at 3R maximum. But what I do when we go to risk management, I will explain how many positions are open. Like if I want to risk $100, for example, instead I will open two positions, risking $50. All right, I can decide to take profit. First take profit to be 1:1 or 1:5 or 1:2. Then the last take profit, the last position, which is the second position, will be the one that will run the 1:3. So in that way, I don't have to open just one position, right? Because most of the time I discover that when price prints 1:1, it actually reverse, right? To maybe hit stop loss, or yeah, most of the time it will print 1:1 before hitting stop loss. So I come up with this idea of opening two positions instead of one, then taking profit at 1.5R, right? My first position will be 1.5R, take profit, right? So the second, and I saw that over time, like in a long run, is very profitable compared to just one position. And by the time trade prints you 1:1, you move stop loss to break even. Before you know, price will come back, hit you on break even before the big move. All right, so if you do that, trust me, if you follow this concept whereby you open two position, right, then 1:1, you close some positions, or close one position, then the second position you can actually leave it, right? Because even if the market should come and hit you out, you are risking the same amount on two positions. So you already made 1:1. So even if market should reverse and hit you on stop loss, then you probably know that you have nothing to lose again, right? You just know, okay, the trade didn't work out, and then you patiently wait for your next setup. All right, so that is it about this particular trade type. But this is not like an A plus for me. This is not like an A plus, setup for me. What I actually want to see is that when price give me a valid break of structure, when price give me a valid break of structure, I want price to actually generate a liquidity, right? Let's say now this is my break right here. This is my break right here. And then my entry is 61.8, as you all know. 61.8, which is this. All right. So this is like a higher probability setup compared to this A. This B is more of a higher probability for me compared to A. Why? Because of this liquidity here, right? Remember, structure, liquidity, entry. That is what smart money trading is all about. So we need liquidity to be taken. But the reason why I enter from here is because there was a sweep here. There was a liquidity taken out here. So this make this zone a high probability, a POI area whereby we should start looking for buyers opportunity. The same thing still happened here. But this is like more like an higher probability because there was a liquidity sweep before my entry, right? Which will give it, which will give me more, more higher probability that yes, this trade is actually like an A plus setup for me in general. All right. So I don't want to explain too much about all of these concepts in order not to make this video too long. So let's quickly dive into the main chart to do the weekly work of areas of concentration, what you need to see and what you don't need to see, right? Then we know what you are doing. So now this is the daily time frame, right? What are you seeing currently? Now, the most important thing is not actually what has happened previously. Focus on what is happening now. Who is actually dominating? Now, I have two confirmations right here. Now, I can see this bearish engulfing candle, which is very, very, higher momentum candle, big momentum candle. So for me, this market is clearly a downtrend, and at this point, the variables I used to define my trend change still occurs. It actually occurs, right? And then I will tell you that for price to come all the way to this, this is like a break here. This is a break of structure right here. Then price market was in an uptrend, right? Then this order flow here, market is respecting the order flow. Now at this point, price then made a change of character right here, and then there was a liquidity taken out right here. So for me, uh price has reversed to take out that inducement right there. So for me, I will actually start looking for buys opportunity because the market is reacting from an area of interest, from POI zone. Why? Because it has already swept this liquidity here. The liquidity below here has already been taken out. So, and fair value gaps here has been covered. So for price to actually, reject this area with this, large turning points, that shows that the uptrend is likely to continue. So I will look out to start looking for long on this zone, or if this one fail, if the market should come all the way to break this zone here, right? That shows that I will start looking for my entries on this extreme order block right here. I start looking for trade opportunities. This is daily time frame. We're not entering from here. So I'll start looking for trade opportunities when the markets come into this extreme POI zone. All right. But for now, Since the market is currently rejecting from an order flow here, which is also like a POI zone, right? Because there was a liquidity sweep before this order flow mitigation. So I will start looking for buys opportunity. So let me switch to the 4-hour time frame to see if there is a POI zone. Okay, this was a break. This was also a break right here, and then yeah, all right. Okay, there was an order flow here. There is an order flow here, which price are already mitigated, right? Now, this is the break here. This is the break. Why? Because price has already taken out, you know, the liquidity below here. Price has taken out the liquidity. So this is the order flow right here. There's an order flow here, which price has already mitigated. So let me switch to the 1-hour time frame to make it more clear for you. So this is the daily breakup structure, which is still accurate to the 1-hour breakup structure as well. So you can see inducement was taken, breakup structure, see the order flow I marked out here, which price has not mitigated before. So this is like a fresh order flow. All right. So for me right now, since price has already tapped on this order flow, right, at this point, and is showing a sign of rejection right there. Let's switch to the 15-minute time frame to see. Okay. Okay. Is there any other flow below? Because the way the market is coming back, it shows that maybe you need more liquidity before trend continuation. Let's see if there's any other flow. There is no other flow beneath this one I marked out here. That simply means this rejection here actually shows that we can still look for entries at this point. So for me, to be honest with you, right, I'm going to take the risk. I will buy at market order right here, right? My stop loss will just be below. It's like below this zone here. So this like how my trade is going to be. Then my overall take profit will be 3R. I can decide to break even. Remember, I will open two position, then yeah, any amount I'm supposed to risk on one position, I'll divide it by two, then take profit at 1R, the other at, yeah. So this is my setup for the week. This is my setup for today. So I'm going to still share with you either the trade hit stop loss or take profit, right? I will still share with you the outcome of the trade and my psychology behind it. So after this video, I'm going to enter this trade on market order and I'm going to long it. All right, so that is that for BTC. Let's check gold. Okay, gold actually respected our areas of interest, which we analyzed last week, most of them, but it kept pushing to the upside, right? It only respected the first one, which is this, right? It didn't come all the way to down here. Remember, I said if it was to, break below this low, if it was to break below this low, then I was looking for price to come all the way to this zone. And if it should break below this zone, then definitely this zone will be a good entry long for me. All right, so but it respected this zone, didn't break below, and then this is the boom, kept pushing to the upside, right? Kept pushing to the upside. So, but unfortunately for me, I still closed out of this trade. I didn't left it. This was how I actually entered the trade before. This was my entry. Then my stop loss was set just below here. And then see if I was to, be patient. That is psychology of trading. That is just the truth. If I was to be patient, right, I would have already hit my 3R already. You see that now. But because of quick profit mentality, I actually, close out prematurely. And this is happening most of the time, all right? Whereby I will analyze charts for me to be patient and wait for the price to play out is just something else, except I just keep my phone, then not having to be checking how the trade is moving. That is only when I normally used to enjoy my trade. But the moment phone is with me checking my phone, the profit and loss every time, I mean, something must always compel you to take action that is anti your initial plan, which is not something good, and I'm working on it currently. So let me wipe the chart so that we can do a fresh analysis for the week. And trust me, this time around, I'm going to stick to my analysis. I'm not going to allow my greed or kind of fear of losing, you know, believe to limit me from full take profit this time around, because I believe that this week is going to be bank for bank. I believe I'm going to make profits, a good one for that matter. All right, because the last the last analysis I did, right? One was full take profit of almost 1 ratio 5. The other was break even, while the last was on the loss. So it was one take profit, one break even, one loss. But coming back to my analysis, if I was to follow my initial plan strictly, right, with all diligence, then I would have made crazy profits. I would have made crazy profits. So this is the daily time frame, and then on the daily time frame, price is clearly bullish, right? Price is clearly bullish. We don't actually need anybody to tell us that the market is bullish on gold. So what we're looking for is buys opportunity. So switching to the 1 hour time frame, let's say we can start looking for entries. So price has been pushing to the upside. This is a breakup structure right here. So where are the order flows? Order flows after liquidity. Remember, if you are trading order flow, please, you should be after liquidity. Let's say this is an order flow. You have another order flow here. If this first one is not mitigated, that is, it has not mitigated, then this should be higher probability compared to the first one. Me, I will want to enter from here rather than this one. I will see this one as a smart money trap. I will see this one as a liquidity, right? So this one as a liquidity. So I will enter from the second one and long it to the upside. So I don't enter based on I saw other flow just like that. No, I want it to follow my plan. Structure, liquidity, entry. So once I get my structure, then I want liquidity before my entry, which gives me higher probability. All right, at this point, there is no any other flow apart from after this break of structure, no other flow has been formed apart from this, right? So entering from this first order flow is like a trap for me. So I'm not going to enter from here. So this is like a trap, except the market generates another order flow here to the upside. Then that is when I can look forward to start looking for entries here. Then I can consider this to be, my liquidity. My liquidity. But now this is like my liquidity because this is the only order flow being generated here. So beneath it, we have another order flow right here. So this is like the only order flow for now on 1 hour time frame, area of interest. So it's like my area of interest. So I will be patient. Remember, trading is all about patience, all right? Not because you see market going up, you just enter like that. No, it doesn't work that way. You have to follow your plans, all right? So if the market come here, I will long it from here, right? Then my stop loss will just be here. And then remember 3R. If it's not 3R, we are not entering. So 3R. Though we do set based on market structure though, bro. The initial take profit level is 3R. So that is it. All right. So on 1 hour time frame, this is my entry, but on 15-minute time frame, let's see which is our lowest time frame. We can see that price has already generated another order flow, right? Right here. there's an order flow here, but this one has already been mitigated because there is a pullback here, right? So this one was mitigated already. So I will consider this whole zone as liquidity. I'll consider this whole zone as liquidity, right? So my entry will be from this next order flow right here, which is the first 1 hour pullback. All right, so I can decide to take the risk here for the buy by the time market retrace to this zone. Why I'm entering is because there is a fair value gaps before this order flow. So that shows that my entry confirmations are intact. There is fair value gaps, right? And there is also liquidity. And I follow the market structure. Simple as that. So the next thing is working on your psychology. Are you patient to actually wait for a trade to play out, or you know, never to panic when the trade is actually doing whatever it's doing? All right. So the thing is always being patient and then follow your plans. All right. So the thing is always follow your plans. Please follow your plans and risk management, right? And you can also, you know, duplicate this on your chart as well. So this is it. This is the chart. It's as simple as that. Nothing else. So what I'm doing now is to wait for mitigation and then look for entries. It's as simple as that. All right. So please never risk, no matter what, no matter how perfect this may be, because most of my analysis they do play out. Most of them hit 3 hour, 5 hours. Some even used to print more than 5 hours sometimes. So, but no matter how perfect a setup looks, right? Never risk more than, if you're using a profit account, at least 1% to 2% of your account, please per trade. I mean, right? Then do not risk over. That is, it will even affect your psychology. The risk management is actually what will help you help your psychology to make quality decisions. But the moment your risk management you know is not intact, definitely it will really mess up with your psychology. So this psychology of a thing is not something you just have to go and grasp from somewhere. It's something you need to adopt into by following your rules and plans, and do the things that actually suits you, not what I'm saying, not what somebody else is saying. Just what you know to yourself that, yeah, this is my own way of trading, this is my own personality, this is my own way of approaching the market based on this, based on that, based on my risk management. This is the way I'm comfortable, or this is the amount I'm comfortable of at risking in the market per trade. So you know how many positions you're supposed to be opening, then calculate your risk per position, right? Do not just enter and start entering different positions, 1:1, 1:2. I mean, 0.01, 0.05, 0.03. No, I mean, the risk is not intact. So definitely your psychology will be messed up. Don't come with the mindset of want to go in once and then boom, you pull out something. If you're a scalper, good, but the point of risk management is not intact, then you are really gambling. Even if you're a scalper, just to get in and get out. All right. So you still need to work on your risk management. Very important. All right. So that is it. Right. Protect your capital. That's what keeps you in the game week after week. All right. So remember, trading is a marathon, not a sprint. It's a marathon. It's a long. It's a game of something you need to think in a long term, not short term. Right? It's not instant gratification. It's not a quick rich, get rich quick scheme. Right? It's something that you have to be doing on a consistent basis with discipline, and over time you see that the result will start, manifesting itself automatically. Right? All you just need is discipline. Follow your plans and rules, and that is it. So thank you all for sticking to this video to the end. I really appreciate your time. Trust me, I really do appreciate. All right, so that's my trading plan for the week. Next week, I will review how this trade played out and what I learned as well. Or during the week, right, I will also review how it played out and what I learned. So make sure you hit that subscribe button. Please make sure you hit the subscribe button and turn on notifications. All right. Also, drop a comment below, right? Which pairs are you actually looking forward to trade, or which are your major pairs, so that by next week, right, we will go into it. I will analyze it to see, right, the potential of you know what you can actually make from that setup as well, right? So Do well to hit the subscribe button, like I said, and thank you all for sticking to today's videos to the end.